Welcome. In this video, what happens if we buy Zbcn with $5,000? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand.
First, let's analyze Zbcn. The presence of such an uptrend is considered a very strong and confidence-inspiring structure in technical analysis. An uptrend means that the price consistently makes higher lows and higher highs over a certain period of time. This indicates that the overall market direction is upward and buyers are continuously supporting the price, especially if the trend line is placed at the lower part of the price and the price consistently reacts upward each time it touches this line. It reinforces the strength of the trend. For investors, this kind of structure increases positive expectations both in the short and long term. Because the price advancing by touching the trend line creates a sense of security in market psychology and proves that buyers step in again at every pullback. This raises the likelihood that the uptrend will be sustainable. The price moving by touching the ascending trend line also shows that the market is moving in a healthy way. Instead of moving straight up continuously, the price corrects at intervals, and these corrections continue down to the trend line. Then buyers step in again and push the price higher. This cycle balances market dynamics and helps the uptrend last longer. If the price quickly moves away from the trend line and rises too fast, the risk of entering overbought territory increases, which can cause sharper corrections. However, when the price moves by touching and holding on to the trend line, this movement appears healthier and more reliable to investors. In such cases, as long as the price does not break below the trend line, a change in the overall market direction is not expected. The ascending trend line also plays a critical role in helping investors determine stop-loss and entry points. Many technical analysts viewed the moments when the price touches and reacts to the trend line as buying opportunities. Because at these points, the price can often be captured at better levels, and if the trend continues, the investor gains a profitable position. On the other hand, a break below the trend line is seen as a serious warning signal. However, it is important to focus not only on short-term breaches, but on confirmed breaks based on closing prices. Because during volatile moves, there can be brief dips below the trend line, but the true direction is only confirmed by closes. Therefore, the reactions given when the price touches the trend line provide clear information about both the trend's strength and market participants' expectations. From a psychological perspective, touches on the ascending trend line reinforce buyers' belief that there is a safe zone here. The upward moves following each touch cause the trend line to be perceived as an important support area in the market. This leads more investors to buy at these levels over time. Especially large investors and institutional traders consider such trend lines in their long-term strategies. Because the price steadily holding on to the trend line shows that supply and demand balance favors buyers. This is taken as a strong signal that the uptrend will continue. Another technical importance of the uptrend is that it can be seen simultaneously across different time frames. If the price moves parallel to the ascending trend line on short-term, medium-term, and long-term charts, this indicates the trend is much stronger. Because this shows not only daily traders, but also longer-term investors trust the market. In such an environment, touching the trend line generally results in a strong buying reaction. Moreover, this reduces the chance of a trend break and prepares the ground for the uptrend to continue. For this reason, price action that moves by touching the trend line is carefully watched by investors, and strategies are built around this structure. Touching the trend line in an uptrend also acts as the market testing itself. Each touch measures whether the support level remains strong. If the price meets strong buyers and bounces back up at each touch, this confirms the trend's robustness. This increases investor confidence and attracts new participants to the market. Many investors keep these touch points in mind as future buying opportunities. Therefore, the activity around this line is a sign of healthy market progress. As long as this structure holds, the price is expected to continue rising. The ascending trend line is also considered a dynamic support in technical analysis. As the price advances, the support level moves upward as well. This reduces the investor's potential loss and increases their profit. Because stop-loss levels are also moved up along the trend line, allowing the investor to stay in a safer position. From this perspective, the price moving by touching the trend line helps investors act more comfortably both psychologically and strategically. Additionally, these touches ensure the price rises in a balanced way without becoming overvalued, which is critical for long-term trends. In conclusion, a price movement progressing by touching the ascending trend line is a strong structure, both technically and psychologically. As long as the structure remains intact, the overall market direction is expected to be upward. The price reacting upward each time it touches this line reinforces the trend's strength and gives investors confidence. In such an environment, buying opportunities generally arise at these touch points. Unless the trend line breaks, the probability of the uptrend continuing is quite high. For this reason, investors closely monitor this line and plan their strategies accordingly. Especially the price moving step by step by touching this line is one of the most important indicators that the uptrend is healthy and sustainable. But we can't decide analysis solely based on trends. Let's also check other metrics. Stay tuned.
The ascending channel structure formed in the market paints a very positive picture from a technical analysis perspective, because ascending channels generally indicate the price moving step by step upward within a certain trend. Considering the current price level is around $0.005 and the expectation that this price could break above the middle band of the ascending channel and reach the upper band at around $0.015, this suggests significant potential for investors. The logic of ascending channels is that the lower band acts as support and the upper band as resistance. The middle band usually serves as a critical threshold for direction within the channel. When the price rises above the middle band, market participants see this as a show of strength, indicating that buyers have gained dominance. Therefore, middle band breakouts often accelerate upward momentum and push the price toward the upper band. One important point to consider here is that the rise from $0.005 to $0.015 represents a substantial gain of around 200%. This movement can be seen not only from a technical standpoint, but also as a highly attractive opportunity in terms of investment return potential. Ascending channels often reflect the healthiest structures in bull markets, because while the price gradually rises, it also makes corrections. These corrections keep the trend healthy and provide a steady rise instead of sudden, erratic jumps. If the price is currently trading just below the middle band and buying pressure starts increasing at this point, a new wave of buying could be triggered with the breakout above the middle band. This wave could carry the price up to the channel's upper boundary. The fact that the channel's upper band corresponds to around $0.015 shows that this target is a technically grounded and reasonable outcome. Investors typically use such technical structures as references for target price calculations. Additionally, the length and slope of the channel determine whether this target is realistic. The current positive and steady slope of the channel indicates that the $0.015 target is technically supported. Within the ascending channel, when the price moves upward from the lower band and reaches the middle band, it usually faces some resistance. However, when this resistance is broken, the chance of continuation upward strengthens, because such a breakout creates increased confidence among investors. The middle band is a level commonly monitored by both technical traders and algorithmic systems. Therefore, a breakout here can trigger both manual and automatic buy orders. Moreover, the journey from $0.005 to $0.015 is not only numerically significant, but also represents an important psychological threshold. Such a large increase can change the overall market perception. When prices make such big jumps, many investors think it's not a coincidence, but rather the sign of a strong trend. This belief attracts new buyers into the market and can further accelerate the upward movement. Also, upper bands of ascending channels are often zones where profit-taking occurs. So, when the price reaches $0.015, some investors may close their positions. This can naturally cause some pullback, but it does not mean the trend is completely over. In a healthy uptrend, such profit-taking is normal and considered necessary breathing periods for the continuation of the trend. Examining the current structure, the price steadily moving within the ascending channel shows that this channel is accepted by market participants. One of the most important elements in technical analysis is that formations align with market psychology. If many investors recognize the same formation and react similarly, the chance that formation working successfully increases. The middle band breakout in this context can trigger a collective buying move. Especially if volume increases during this breakout, it helps the price's journey toward the upper band to rest on stronger foundations. Breakouts without volume support are usually not sustainable, but if a breakout occurs with increasing volume here, the $0.015 target becomes much more strongly supported technically.
It should also be remembered that this channel movement is not only a short-term opportunity, but can also be an important signal for long-term investors. Ascending channels are strong technical structures indicating that the long-term direction of an asset is upward. Therefore, breaking the middle band and moving toward the upper band can also boost long-term investor confidence. In such a case, not only short-term traders, but also long-term investors may increase their positions. This can further strengthen the upward movement. Another important aspect here is risk management. The lower band of the ascending channel is a vital support area for the validity of the trend. As long as the price does not fall below this area, the channel structure remains intact and the targets remain valid. Therefore, investors usually place stop-loss orders slightly below the lower band when opening positions after the middle band breakout. This way, they limit their risk in case of adverse moves. However, the current outlook suggests that if the price rises above the middle band, the uptrend is likely to continue and the $0.015 target can be reached. In summary, in the current ascending channel structure, when the price passes the middle band combined with market psychology, technical data, and volume support, it signals a strong upward potential from $0.005 to $0.015. Such a move offers investors both a high return and the advantage of trading in a market where the trend is ongoing. The upward momentum triggered by breaking the middle band can continue up to the channel's upper limit, during which investors' confidence strengthens and new waves of buying may emerge. In this context, the technical opportunities offered by the ascending channel can result in very profitable outcomes when properly followed.
If we have a capital of $5,000 and consider investing this capital into Zbcn coin, which is currently priced at $0.005, calculating the potential future return of this investment is a simple yet exciting process. First, dividing $5,000 by the current price of $0.005, we end up with exactly 1 million Zbcn coins. This is a very strong amount for an investor because such a high quantity of coins allows the portfolio to gain significant value even with relatively small price movements. The key point here is the price's potential to reach a certain target. If the target price we set is $0.015, then the value of our 1 million coins would reach $15,000. This means our initial capital would triple. In other words, a $5,000 investment would yield a net profit of $10,000 when the price reaches $0.015. This kind of scenario is not only a numerical gain table for investors, but also an important source of psychological motivation. In crypto markets, especially with low-priced altcoins whose market caps have not yet fully expanded, such price movements have occurred many times before. The key point here is the belief in the asset's future potential and the patience to hold on to that belief. In a project like Zbcn, which has not yet revealed its full potential, a rise from the $0.005 level to $0.015 represents a 200% increase, a rate that is hard to achieve quickly with traditional investment tools. Another important aspect of such investments is risk management. Although the potential return is high, the volatile nature of crypto markets means prices may not always move as expected. However, the striking point here is the very low starting price. Buying at the $0.005 level offers the possibility of exiting with relatively smaller losses in case of drops, since the price is already at a very low level. This reduces the investor's psychological pressure and makes it easier to maintain patience to reach the target in the long run. High quantities of coins purchased at such a low price create significant portfolio value increases when the price reaches the target level. For example, the 1 million coins mentioned here mean that every $0.001 increase in price translates into an additional $1,000 gain. This means that a rise from $0.005 to $0.006 increases the portfolio's value from $5,000 to $6,000. These seemingly small increments are very effective in large quantity purchases. From this perspective, the $0.015 target is not only a possible price level in technical analysis, but also a turning point that will exponentially grow the investment. On the other hand, to evaluate the long-term returns of such an investment, it is necessary to look at the project's fundamentals and market trends. Positive news such as future exchange listings, partnerships, technological developments, or community growth supporting Zbcn increases the likelihood of reaching this target. Investor psychology and community influence are especially important in the crypto market. Projects with strong communities and active development teams tend to show much more stable performance during price increases.
From a psychological perspective, many investors realize profits when the price reaches a certain level. Therefore, some fluctuations may occur along the way if price movement toward the $0.015 target starts. But a long-term investor committed to the target can view these fluctuations as opportunities. For example, selling pressure might increase when the price hits the $0.010 level, but as long as the project fundamentals remain solid, the $0.015 target still remains valid once that pressure is broken. It should also be remembered that the biggest advantage of such investments is the chance to acquire a large amount of coins at a low cost. This not only provides large gains when the price rises, but also offers the possibility to reduce risk by partial sales if necessary. For example, selling half the position when the price reaches $0.010 before hitting the target and carrying the remaining half to higher targets can be a smart strategy. This way, the investor protects against risk while staying open to potentially higher gains. Finally, the potential gain from a $5,000 investment here represents a very attractive example in terms of the risk-reward ratio in the investment world. Converting the initial capital into a high quantity of a low-priced asset opens the door to substantial profits at the target price level. This strategy allows investors both to benefit from short-term price increases and to reach higher levels over the long term as the project develops. If market conditions and project development support the target, the 1 million Zbcn coins bought at $0.005, reaching $0.015, can turn an investor's dream into reality.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.